Morning, good to have you on the show, and evening to you. Arvind, what could be the ramifications of the West Asia crisis? Because it doesn't seem like it's peaked out, or in fact is anywhere close to that.
Well, you're absolutely right. There is no clear resolution on what's going on. And I would say that, there are two possible, maybe three possible ways this could go. One is that you see an escalation where Iran does take action on trying to close the Strait of Hormuz, which would invite intervention by the U.S., and the U.S. would, come down very hard to make sure that those pass stays open, and that could get U.S. involved in a conflict with Iran. Another would be if Iran retaliates, including, attacking U.S. bases in the Middle East. That too would involve the U.S. in a retaliation. And the third would be this, war between Iran and Israel continues for a few more days. One side is firing missiles, the other side is, got its aircraft over Tehran and attacking. And at some point, the conflict kind of ebbs. Some kind of ceasefire is declared. And to me, in two out of those three cases, whether the U.S. is involved or whether the war just continues on its own, I don't think there is an interest, certainly on the side of the U.S. or because of the U.S. interest on the part of Iran to significantly impact oil export infrastructure. If nothing happens either on Karg Island, from where Iranian exports go out, or on Strait of Hormuz, from which entire exports of the Gulf region, whether it's Saudi or Kuwait or Abu Dhabi or Iran or Iraq, all of the exports go out through the Strait of Hormuz, or not all of a significant portion of their exports go through the Strait of Hormuz. So either Karg Island for Iran or Strait of Hormuz, if either one of those get attacked, then you could have a spike in oil prices. Our central case remains that, there's a 25% probability of something like that happening, but the 75% probability is that this will remain a hot conflict, but without directly impacting oil infrastructure. But there's one other thing. Shipping companies are going to be avoiding calling in or charging a significant premium because of the risk and uncertainty. So that is going to cause the cost of oil to go up, which it already has. So even if nothing happens, you could see for a sustained period higher shipping costs, less ships willing to call, which will again raise the price of crude, which might cause crude prices to sustain in the 70s. So those are the factors to keep in mind from a crude market standpoint.
Okay, Arvind, hi, morning. This is Snehi also joining in. Want to understand your view on how much do you think investors have already priced in the possibility of a full-blown conflict in the Middle East? Because if you see right now, the US futures are trading in the green. This could be on the back of comments that Trump has said there's no involvement. He's also vetoed the killing of Iran's supreme leader. So to what extent do you think the market has priced in the impact of whatever's going on?
Well, to the extent that the market thinks that the most likely outcome is that this will remain a conflict between Israel and Iran without a significant impact on the oil infrastructure, then the market's looking through this $75 crude and saying, in the next month or two, crude prices will settle down. It'll be back in the 60s. And so the global economy will not be significantly impacted. That's the central case that the market's now coming around to, at least for now, unless something changes. These disruptions, short-term oil price disruptions, are buying opportunities. So in that sense, I think after the correction on Friday, I think global markets are seeing a bit of a breather. But look, wars are unpredictable things, and we'll have to wait and watch. But I think I agree with the point that if this is not heating up much more in terms of oil infrastructure, then global equities should start to show signs of some modest recovery from here.
Seems like the core point right now, or focal point right now, is crude oil prices, and only then one can take a equity-based call. But who better than Vandana Hari to answer that? Vandana, hi, morning. Good to have you on the show. Things still pretty much, building up when it comes to West Asia. But tell me, we've already seen a 12% spike on crude in just the last 1 week alone. Where are we headed?
Good morning. So I think that whatever risk premium the market had to assign on account of the Israel-Iran tensions is already embedded in crude. So we saw most of that jump happening on Friday when Brent and WTI settled higher on the day by about 7%. What you can see quite clearly from this morning's action, at one point when the markets opened, crude Brent jumped back towards $78, but very quickly pulled back, very similar to the price action we saw on Friday when it actually settled nearly $3 below the intraday high. And we're seeing the same action. We've seen the same action this morning. What that tells me is there's a bit of tug of war in the market in regard to how much supply risk to assign to this whole situation. And as of now, the consensus is that there isn't a real risk, a threat to supplies from the Middle East or the waterways, such as the Strait of Hormuz and the Bab el-Mandeb Strait. So the market it will probably be now in a holding, the crude will be in a holding pattern. The market will be in a wait and watch mode. My base case remains that that Iran and Israel strikes against each other will remain targeted, relatively restrained, and at least deliberately they will not be targeting the oil infrastructure in the wider region. We know that both of them have targeted to some extent infrastructure in each other's countries, upstream and downstream oil and gas. But the wider Middle Eastern oil supply, production and supply is not under threat as of now.
All right, but Arvind, help us understand that what could be the implications on the global markets and especially the emerging markets, because for the week gone by, yes, there was a sell-off. Even you were highlighting that the markets for now are seeing a bit of a breather. But Arvind, in what time do you believe that the markets will digest this fact and move on? Because this particular week, we also have the FOMC meet, the trade talks are going on. So give us some sense that how do you see the markets moving?
Well, to the extent that, that oil remains, in this mid-70s range with the risk premium, but without anything happening, I would say that markets should start focusing on other economic drivers. And, the Fed meeting is most likely going to be a non-event. We don't expect any action by the Fed. But I think, the trade talks, we should hopefully in the next few days and weeks get some clarity there, because the market hates uncertainty. So you have uncertainty on the crude oil side, you have uncertainty on the trade side, and yet the markets, the pullback on Friday was very modest compared to all the uncertainty. The markets are still very close to, recent highs. So I think that clarification of uncertainty is essential for the markets to continue to perform, and that I think trade is the big one. I'm assuming, again, that, Iran, Israel stays contained to direct attacks on each other. And frankly, I would just add, not meaningfully so far on Iran's oil export infrastructure, because if Iran's oil export infrastructure is targeted, if 1 million barrels or 1.5 million barrels of Iranian exports are impacted, then that could have significant, it may not have as big an impact as the Strait of Hormuz, but if for whatever reason Israel goes after Iran's export infrastructure, that could cause another $5-10 or more spike in prices. But barring that, I think that markets should be focused on other things and should remain well behaved.
Okay, Arvind, thanks for the view coming in. On that note, we'll let you go. Thanks so much for joining us. But Vandana, I want to get your sense on what you believe the next OPEC Plus action could be. Do you believe they are going to increase their supply to try and stabilize the market, or do you think they are going to hold back to ensure some profits?
So the statement that came out of OPEC on Friday was that they did not see any direct threat to supply, any shortages in the market, and no need to act immediately to the situation, which was a bit of a contrast to the International Energy Agency, which had earlier issued a statement saying that its members stood ready to put oil into the market from their emergency reserves. So in terms of what OPEC Plus does in the coming months, my expectation before this Israel-Iran conflict broke out was that the 8 members that have been accelerating the unwinding of their 2.2 million barrels per day of cuts will remain on that trajectory. So they've already done that for 3 months, and I expect them to remain. This is more, I believe, a response to internal tensions and an attempt to preserve cohesion and peace and calm, solidarity within the group, rather than anything necessarily in the market outside. So this is OPEC Plus turning inwards and looking at what it needs to do to preserve, to stay intact. I expect OPEC Plus to stay on that trajectory. By the time they take their next decision on their monthly, the unwinding of the cuts, hopefully this Iran-Israel conflict, the dust would have settled on it. So I don't expect this particular conflict to change necessarily that trajectory of accelerated unwinding of OPEC Plus cuts.
All right, Vandana, so good having you today, this morning. Thank you so much for taking the time out and speaking with us.